Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In these recordings, we talk about the news that affects the markets and then we put it in perspective using our Elliott Wave charts. In this video, we'll be featuring the stock symbols that you see on your screen now. Remember, if there's a particular symbol you're interested in, you can go right to it using the chapters feature on the video. With that said, let's take a look at the chart. At the time of this recording, it is late on Friday evening, so the futures market is closed. By the way, if you like these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we appreciate it. Lots to talk about tonight, so let's go ahead and get right to it. You take a look at the market, you can see that we had this big move to the upside on Thursday as the CPI report came in a little bit lighter than expected. And I say a little bit because it still showed an annual increase of 7.7%, but it didn't have an 8 handle. So the market used that as a reason to rally, and rally it did on Thursday with a gap up closing near the highs of the day. Now the interesting thing is on Friday, the bond market was closed for Veterans Day. And for all of those of you that served out there, thank you so much for your service and happy Veterans Day to you. We really appreciate your service. When we take a look at the chart, without the bond market as guide, we continue to the upside here in this wave 4 corrective move. And if we look at the moving averages, you can see that we're pretty overbought now away from the 10-day moving average. Now going back and talking about the fact that this wave 4 is a correction, one thing that we note now is we do have a qualified zigzag in the wave 4. Now the zigzag is one of the Elliott Wave corrective patterns, flats, zigzags, and triangles. In fact, a zigzag pattern is one of my favorite directional patterns to trade. It's only 3 waves in length. And so when you look at the fact that this B wave here corrected 50%, that looks for 100% extension. That C wave would be up around 411. So the question becomes, if this zigzag plays out, is that going to disqualify the 5-wave impulse pattern to the downside? While I'm talking about zigzags, we actually have a zigzag mastery class that's coming up starting on November 23rd. It's free to all of our alert subscribers, but we welcome anyone that would like to pay a one-off fee and join us as well. You can sign up underneath this video or go to our website at ewotrader.com. So the question now becomes, the fact that we're a bit overbought, are we going to come back and fill this gap here right around 380? That is still a very important level of support resistance. And did we get a little bit overdone today without the bond market being open? So I think the beginning of next week is going to be really, really interesting to see how this plays out. If we take a look at the VIX, you can see that we did continue to the downside, and you would have thought maybe yesterday we would have dropped a little bit further. I thought so, but we did come down again today, again without the volatility associated with the bond market. So are we coming down now towards this 20 level? That would give, I think, ammunition, momentum, energy, whatever you want to call it, for this zigzag pattern to continue to the upside and perhaps hit that level. When we look at the 10-year, it did have a big drop yesterday, but again, bond market being closed today, we just have that little tick there. So now we have a 31% wave 4 correction, not quite to 38.2. So I think that's important to note that there could be more correction in the bond market, or we could stop here and head back to the upside. Again, a lot of emphasis on what happens on Monday. And then we look at the dollar. The dollar followed through with Thursday's big move to the downside. We have a 34% wave 4 correction. I've talked about this numerous times. I am a fan of a strong dollar, but not this strong. But pretty vertical to the downside here. So are we a little bit overdone on this corrective move in the dollar? It kind of looks that way. So you can see where there's a little bit of ammunition here, if you will, or potential for some sort of a correction to start the week, and then we see where things go from here. Super interesting when you have these multiple Elliott Wave patterns. Really important to understand the intricacies of Elliott Wave. That's why we do these videos, to try to help with some education along these lines. All right, so now we take a look at some stocks of interest, looking at Tesla. And boy, we talked about Tesla a lot in Tuesday night's TradeFinder, where we Elon Musk sold more shares in order to try to help finance whatever he's going to do with Twitter and try to keep them out of bankruptcy. There's rumors there that he may take Twitter into bankruptcy. I don't know about that. There's going to be all kind of rumors going on. But what we talked about Tuesday night in TradeFinder is, will Tesla absorb his share sale of Tesla shares to use the money for Twitter? The last time he sold shares when he was going to buy Twitter, Tesla absorbed it and bounced back to the upside. It seemed to bounce back to the upside today, but really nothing matters now on Tesla. Remember when we were talking about how Tesla really needed to hold 200? It didn't, and it came all the way down here to 180. So a pretty strong wave 3. There you go with another zigzag pattern right there. They're everywhere. When you start to look for them, you find them all over the place. So now can we get back above 200? Can we at least rally up and create this wave 4 correction in this overall downward move in Tesla? It's looking kind of bleak on Tesla. What do you think? What are your views on Tesla? Can Tesla withstand what's going on with Elon Musk, Twitter, all of the regulatory stuff that's out there? Post a comment under this video. I'd be really interested to hear what you think. And if you're interested in TradeFinder, by the way, we do it every Tuesday night at 9 o'clock Eastern Time. It's free. We look at the charts, we talk the markets, we look for trade ideas, and we have a live Q&A at the end. It's great. Hopefully you'll join us for the next one. Love to have you there. All right, so now another stock to look at, AMC. Last time we looked at AMC, we talked about how, boy, it looked like it wants to come down and test 5, and that's where it did. Now, that's a point of institutional interest because unless you're registered as an aggressive institution between 5 and 10, and if you get below that, even aggressive investment objective institutions have to sell their shares. So it's a logical point to find support, to see if some institutions come in and support it. And boy, they did. A big bounce to the upside there on AMC. And if you look at the moving averages, you can see right back to the 50-day moving average. Not significantly overbought on this bounce, but nonetheless a nice bounce off of the $5 target. And you want to look at the volume. Notice the increase in the volume. As we got down towards 5, we had this low volume, and there's that support that kicked in with the volume, getting it to bounce, at least for now, off of that $5 level. Coinbase, geez, that was in the news as well with the collapse, if you will, of the FTX exchange, and that sent the whole crypto world into a downspin. We'll look at Bitcoin here in a second, but I know that there was a lot of chatter on Twitter today about Coinbase. Well, it fell like everything else crypto did with that news of the problems at FTX, and now we've bounced back up, but again, bounced back to resistance. Kind of the same thing that we were just looking at with Tesla. Can we get back above 60 on Coinbase? So while I'm talking about it, let's just go ahead and look at Bitcoin now. And just when we were breaking above this symmetrical triangle, above that 20,000 level and looking to see, all right, we're consolidating here above 20 now instead of consolidating between 18,000 and 20,000. Are we going to make a run up to 24,000, which was the next resistance area? Well, when all that news came out, nope. There's that 16 level, and we said that if we couldn't hold 20, 16 might be a point to find to the downside. Didn't think it was going to happen anywhere near this fast, but there you are down to 16,000, and see, you know the deal. Can we get back to 20? Can we get back above 20 on Bitcoin? That's going to be what everybody's looking at. Amazon, really nice bounce back to the upside today. And you take a look at the moving averages followed through with yesterday's move to the upside. Again, not really that overbought, but now we're getting into a point where we have a little bit of resistance here on Amazon. But with this move up to back to 100, can we get up here and fill this gap? Look where that wave 4 correction is in Amazon. That would make a lot of sense. The market doesn't always do things that make sense, but moving up here to this wave 4, I think makes sense. Fill that gap, and then we see where Amazon goes from here. Meta. Boy, just got absolutely shellacked on its earnings report. Wave 5 down there to 75% extension, but a pretty nice bounce to the upside here. Can we get all the way back and fill that gap up here around 125, near 130 there on Meta? So a little bit overbought here, as you can see, hit the 30-day moving average on the high, That's a big ask, I think, to get back up and fill this gap, but it's trying with a pretty vertical move, maybe just a little bit sideways, and then we eke back to the upside there. Some of our international markets, the EWA, now we talked about this Tuesday night in TradeFinder and last night in our insiders meeting, which is for our alert subscribers only, and we said that the EWA Australia needed to get above 21 and hold, and it did, and that if it could hold that 21 level, then we're probably going to run up towards this previous wave 4 here, right in that 23 range. Well, that wave 5 extended 61.8%, my favorite fib level because it's such a strong one. Well, I didn't think we're going to go from 21 to 23 quite this fast, but there you go. There's the vertical move. But when you put the 10-day moving average on, you can see that we're overbought now on the EWA. So perhaps we don't quite make it to 23 without a little bit of backing and filling here. In fact, if you're bullish on the Aussie market, you'd want to see that, because what ends up happening is when you try to break a point of resistance, when you're already overbought, it doesn't hold and you come back down. So we want to see that consolidation here in this area at or around 23 before it makes an attempt to break above it. Looking at the EWC for Canada, same story. Finished with a doji here, but 33 is to 21 on the EWC as or 33 is to the EWC as 21 is to the EWA, he tried to say. But here we go. Again, vertical move back to the upside. 36 is the point where you look for resistance here on the EWC. Once again, a pretty vertical move and overbought short term. These overbought short-term things don't mean that that's going to be the end of it, but it does mean that some backing and filling is likely and healthy, which is the most important thing if we're going to have any sort of a run to the upside in the end of the year. People have been asking, is there any scenario where we could rally into the end of the year? Well, just having obviously a little bit of good news, but all the Fed speak came out, all the Fed governors came out, and they're like, okay, well, that's nice, but one number that's showing just a little bit lower in inflation is not enough. There was no Fed governors that were coming out saying, hey, yeah, that's it, we're done. It just was an excuse for the market to rally, perhaps from an oversold condition, extended to the downside. Yeah, again, we're going to see next week. Can't wait to see what happens in the markets next week. India also moving to the upside. Now, India had a little bit more consolidation here, a move that you might think has a better chance of holding. India, the INDA needed to get above 42 and stay there. You remember all this. If you've been watching our videos, you know all these things we've been talking about. And if we could get above 42, then we had a chance to run up to that level here around 44. And that's where we are. And so we take this Elliott Wave pattern off because that one was disqualified, but now we're at a major point of resistance here on the INDA, a little bit overbought even with kind of a sideways day today. Same scenario here. You want to see some backing and filling, some consolidation here. Let's consolidate this upward move, and then we can see if we have the energy to make new highs or take out the next level of resistance, if you will, and move higher from here. Looking at Germany, holy cow, look at this chart. Look what happened here. We were talking about on this test of the low here, are we going to go lower on the EWG? Is that wave 5 going to relabel to a 3? It did. It relabeled to a 3. Look at that. But not because we continued to the downside here, but because we've bounced, and look where we went, right to the 61.8% level, a classic area to find a wave 4 correction. Once again, too vertical in my opinion. You've heard me say this before. When things go vertically up, they often come vertically back down. Where could we come back down to? Well, there's a pretty strong level of support right there at 23. We were able to get above it. So coming back down, getting back down towards that 10-day moving average, filling these gaps, testing this level of support, that's when we'll find out if we have something more to the upside out of the EWG, or was this nothing more than another wave 4 bounce with a lower wave 5 to come. But boy, really interesting on the EWG chart. Looking at Hong Kong, you guys have been asking about that. Same thing here, really vertical move. Look at this gap up, but it's right at a 50% wave 4 correction. So even though we've had these nice moves, it's all right, pump the brakes here a little bit. Don't get too excited yet. Let's see how all of these are digested. Consolidation, backing and filling to see, again, if there's energy or momentum to continue higher. Because right now we still have a qualified 5 wave to the downside pattern here. Thought I would go ahead and bring in oil. Oil did break out, but it went just above 75 and then came right back to it. Doji today, so perhaps we can continue this upward move. We look at the moving averages here. We got a little bit overbought. If we walk this back, we got just a little bit overbought here on the breakout move, and I'm talking about the breakout from this triangle that we've been talking about. And so we had this very large triangle, and we broke out, but then came back down to test the breakout. That's one of the things that happens out of these corrective triangles. Remember we were talking about the zigzag being a corrective pattern? Flats, zigzags, and triangles. Triangles are as well, especially when you have a wave 5 that finished. So oil broke out, came back and tested it. Now we got a doji. Something's getting ready to happen in oil next week, but with that big triangle, we still don't know if it's an upward or downward move. Sometimes you get these false breakouts. Sometimes you get a breakout, a test, and it continues in that same direction. So you kind of just gotta, let's let the market tell us on oil where we go from here. Last but not least, gold, finally getting a bid in gold. I was a little surprised to see that continue to the upside today. We talked about this with our insiders last night on the fact that gold was already overbought and it needs to come back down. Thought it might come back down and test 160 before going higher, but it didn't. We continued to the upside. And with that wave 5 down there around the 61.8% level, you would look for a potential move back to the previous 4. But again, we are significantly overbought now on gold. It's great seeing a bid underneath the metals, but now we're overbought. If we come back down, if we can hold 160, test that, let the 10-day moving average catch up, perhaps we can continue with this bid in gold and move higher from here. So lots of really exciting things to talk about on the charts and an exciting week to come next week. Hope you enjoy your weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.